Hi, this is Ed Weinberg from 𝘲𝗍𝗿 Investors, and today I'm interviewing 𝘲his𝗍𝗿. He has a tax attorney background, and he's the managing partner at CleanView Capital. So, let me bring Stan onto the screen. And Stan, I guess, why don't you tell me a little bit about what your company does?
Okay, thank you, Ed, and hello, everyone. It's nice to be with all of you today. CleanView Capital is financing a clean energy future. And by that, I mean we provide financing for solar systems and other clean energy projects for commercial and industrial companies nationwide. We make their ultimate acquisition of these assets affordable.
Okay, so if I want to put one of these on my house, you're not the right person to come to.
That's correct. We're strictly a commercial finance company. My background, I've been doing this only for about 35 years. Because I'm a tax attorney, we structure these financings technically as a true lease in order to monetize federal tax benefits and share that value with companies who are not in a position to use the tax benefits and thereby make the projects affordable.
Okay, so what some of the companies that come around to they want to put it on our house, they use something called a PPA, or a power payment agreement. What's the difference between that and using your company?
Okay, well, the power purchase agreement that was developed by the solar industry in particular is a 15 or 20-year contract. The tax benefits and other incentives available for solar are used by the provider of those programs, and only a small amount of value is shared with the customer, maybe a 10 or a 15% discount from their current utility rate. With our lease financing, it's a more traditional 7-year program, and we pass through more value to these customers because we, first of all, give them the full amount of energy savings, and we share with them the monetized value of a federal investment tax credit and depreciation, and any state or local incentives are all for the customer. We don't take those away or share as well. So all in, the program is about providing customers with more value than what's available today in these other programs.
All right, so let's say that I decide I want to go out and purchase it with cash right now. I call up a solar company. I say, I've got the money to do it. Come on over, put it up on the roof of my commercial building. How is now? Am I going to be able to? Let's say that I spend $100,000 on this solar system. Am I going to be able to deduct that whole thing the first year?
Well, it depends on the tax laws in place at the time when you place it in service. But while that makes sense for a residential customer paying all cash, it's not typically what we see with commercial accounts. And I'm not talking about strictly solar, but 35 years of doing this, companies typically don't write a check and pay cash for any type of equipment because there's other needs for cash in the business for working capital and other purposes. So with the financing, there's no upfront equipment cost. There's low monthly payments in our lease, leading to a purchase option at the end at an affordable price, and thereby conserves the use of cash in the business for working capital and other purposes, where it will earn a much greater return than if it was tied up in long-lived equipment that's like solar going to last 25 years or longer.
So would I if I bought a system for my roof for my company and I paid cash, would I typically have to write that off over a certain number of years?
Correct.
What the taxes are now? Okay, so I'd have to amortize it over, and how many years is that? Is it over the life to the useful life, or is it over? Do they put an actual number on it like they do with real estate typically?
Well, it goes into a depreciation schedule. For solar, it's considered a 5-year maker's modified accelerated cost recovery system, a 5-year maker's depreciation. Currently, there's bonus depreciation in the first year. In addition to that, under the current bills in Congress, if they get approved, could be just a 1-year write-off. But there's a 1-year write-off right now for small amounts of business equipment under so-called Section 179 of the code. One way or the other, companies get to write off in full whatever they invest in any type of equipment, including solar. But what makes our program attractive is, why write a check for $100,000 today if you can make 7 years of monthly lease payments that add up in total to only about 68% of project cost, or $68,000. Those payments are 100% tax deductible because a lease is a usage agreement. There's no interest in it. And you purchase the system at the end for an amount equal to $15,000. So your all-in payments in total add up to only about $85,000. And all those payments are 100% tax deductible for a business that wants to own a solar system. So you can see how that conserves cash for a business. They're using the system. It's generating energy savings throughout that 7-year lease. All of that savings is for them. And when they're finished with their payments and the buyout after 7 years, it will continue to generate energy savings for them throughout the 25-year useful life of the solar system. And that's what makes it affordable. So our program, using a traditional operating lease, is really what we describe as a low-cost path to ownership at an affordable price. It's designed for companies that want to own a solar system because they realize it's through ownership that they achieve greater energy savings and a higher return on investment than what's available from PPAs or other industry programs.
Okay, and I see that Alfredo is watching, and if anybody else is watching, Alfredo, can you just hit the like button just so we know that you can actually hear us? And Alfredo has a couple of questions. So he has some questions about taxes for solar energy, and he wants to know is if for solar energy, it's part of the house. Well, while it is being leased, can he actually get the benefits, the tax benefits, or what tax benefits are there?
Okay, so the key tax benefits is a investment tax credit. This is a federal investment tax credit in an amount equal to 30% of your equipment cost. It's available to the person who paid for the equipment. And in addition to that, there's the write-off using depreciation if you're a company for business use of that asset. Now, it's a little different on the residential side. You don't have depreciation, but you do have the 30% federal tax credit if you're the taxpayer who paid for the equipment. Now, the other big incentive is something called net metering, where if your name is on the electric meter and you own or are using the system under a lease, then you're entitled to basically sell back to your local utility any solar energy that's generated over and above what's consumed at your house that day. And again, that's an offset to the monthly electric bill. So obviously you would have to be the party whose name is on the electric meter to obtain that. There may be state or other local incentives depending on which state and town you live in. And those would be available as incentives as well. For instance, here in New York, where I live, there's a 5% New York State incentive that's available as well to residential up to, I think, $5,000.
Okay, so now, first of all, you only do this for your company only does this for commercial, and what's the minimum size that I can have, or the minimum dollars I can spend on a system in order for you to finance the lease?
Right. So we started $100,000 as a minimum lease amount, and then increased from there. Excuse me. So in terms of project size, you're probably talking about a 50 kW solar system size. Typically, a residential installations, you're seeing systems that could be as small as 5 or 10 kW. That's more the norm. So we're clearly talking about commercial size systems that we get involved with, and they could go up into the multi-million-dollar area for some of the public companies as well as privates that we're dealing with.
Okay, so for the first 6 or 7 years, depending on when I decide, I may decide if it's my company that I want to buy out the system. I can write off those entire expenses that I'm paying for the lease every month. Is that correct?
Correct. The monthly payments are 100% tax deductible as ordinary business expense because it's a true lease, just like leasing an automobile. That's what most people understand. They're very familiar with leasing automobiles. It's really a rental agreement. You're going to be paying those monthly payments for the use of an asset, a car, a solar system. It doesn't matter. It's a true lease, paying rent, and the rent payments are 100% tax deductible to a corporate lessee. And if you don't exercise a purchase option, you have to return the equipment at the end of the lease. And while it's in your possession, you're going to insure the equipment and you're going to maintain it, whether it's a car or solar system, etc. That's your typical triple net lease for equipment.
Okay, so after my 6 or 7 years are up, I purchase it from you. Let's say that we started with a $100,000 system. So I'm going to buy that from you after 7 years for 15% of the original price. And so that's going to be $15,000. Now, supposing I don't have $15,000 extra dollars in the kitty to do that, how am I going to buy it, or do I have to rip it off my roof and give it back to you?
Okay. Good question. And trust me, we don't want it back any more than you want to return it. And so we're going to help you out by financing your purchase price. And what typically is the objective of commercial customers when they're acquiring equipment at the end of the lease term is to finance it over a period of time that will result in monthly payments that are the same or lower than what those payments were during the lease term. And that's part of making the equipment affordable to them. So for instance, this 15% buyout at the end, financed over a couple years, will keep those monthly payments consistent through what becomes, in essence, a 9-year investment strategy. So you never have to write a big check before or after the lease term.
Okay. So anything else you want? I think that about wraps things up here. Anything else you want to mention?
Just the fact that we're very active with this project, this program nationwide, and the feedback we're getting from customers as well as the solar contractors that we work with is it's the best program of its kind in the solar space.
Okay, great. So this has been Ed Weinberg. I've been interviewing Stan Fishbein. He's the managing partner at CleanView Capital LLC, and they're in the business of leasing solar systems to people, rather not people, to companies. And I'm Ed Weinberg. You can see this broadcast when we're done at ctreinvestors.com. Thank you for joining us today.
Thank you, Ed. Thank you.